And thank you so much for joining me here. Just a few China updates to start off the show. Strong sales growth at Huawei helped power an 11% rise in China's total smartphone shipments in October. This is data from research firm Counterpoint on Tuesday. This is indicating signs of potential recovery in its mobile market. Take a look.
The smartphone market made a big recovery in China in October. Shipments were up 11% according to data from the research firm Counterpoint on Tuesday. It said strong sales growth at Huawei proved a major contributor to average year-on-year growth for smartphones. The data showed sales at the Chinese tech giant were up 83%. It also said sales at rival Xiaomi were up a third in October, but it didn't provide any specifics about Apple's performance during the same period. It's welcome news for Huawei, which has spent years struggling with US sanctions. In August, the company launched its Mate 60 smartphone series, which analysts said was powered by a self-made advanced chip. Some see that as an answer to Washington's efforts to stop shipments of some chips to China. But Tuesday's data wasn't all positive for Huawei. Counterpoint said there could be lingering bottlenecks for the firm, as it could still see production issues. Counterpoint said China's smartphone market has seen sales fall over several quarters, with a 3% drop in the quarter ending June. But analysts expect the market may be on course for a rebound.
And now let's take a closer look at new economic data out of China. It offers a sort of a mixed bag here, from China's factory state to the housing market. Let's take a closer look.
Over in China, the figures for October beating expectations. Industrial output grew 4.6% on the year, hitting its highest level since April. Retail sales also came in stronger than expected, while the jobless rate held steady. However, China's economy continues to face numerous challenges, including weak demand for exports and the turmoil in the country's vast real estate sector. Beijing, too, has been laying out measures to boost a recovery, but economists say they have had little impact as yet.
And a quick recap of markets. S&P 500 and Nasdaq posted their biggest daily percentage gains since April on Tuesday, as softer than expected inflation data supported the view that the Federal Reserve may be done raising interest rates. Here's a quick recap.
Wall Street's main indexes closed sharply higher on Tuesday after encouraging inflation data lifted investors' hopes the Federal Reserve could be done raising interest rates. The Dow jumped 1.4%, the S&P 500 added 1.9%, and the Nasdaq soared nearly 2.4%. Data from the Labor Department showed the smallest rise in underlying inflation in 2 years, with no month-to-month uptick for consumer prices. But Lisa Erickson, head of Public Markets Group at U.S. Bank Wealth Management, says that while the Fed may feel a, quote, sense of relief, the battle over inflation may still not be over.
If you look at today's number, while very positive both in the core and headline numbers in terms of price pressures, you also see that the absolute numbers were still higher than the Fed's 2% target, around 4% for core and still in the threes for headline. And so there still is some way to go. So again, a positive report in terms of potentially making the pause in the Fed rate rises come a little bit sooner, but not conclusive.
Among individual movers, shares of Snap jumped 7.5% following news that Amazon will allow Snapchat users in the U.S. to buy some products listed on the e-commerce company directly from the social media app. Home Depot gained nearly 5.5% after the home improvement chain beat quarterly profit estimates. Also outperforming the broader market were shares of Tesla, which jumped more than 6%. The small-cap Russell 2000 index and rate-sensitive S&P 500 real estate sector both added more than 5%, while the utility sector rose nearly 4%. All three registered their biggest daily percentage increases in a year.
And former U.S. President Donald Trump, the leading candidate for the Republican presidential nomination in 2024, has promised to crack down on illegal immigration if elected a second term in office. Here's some of the policies under consideration.
All the time, I'll solve the border problems with 24 hours of taking office.
Echoing campaign promises from his first run for the White House, former President Donald Trump has vowed to crack down on immigration again if he's elected to a second term in office. Some of the policies he wants to implement may sound familiar, but others would be unprecedented. Trump has said he would bring back his Remain in Mexico program, which forced non-Mexican asylum seekers to wait in Mexico for the resolution of their cases. The program was terminated by President Joe Biden, who promised more humane and orderly immigration policies. Trump has also said he will seek to detain all migrants caught crossing the U.S.-Mexico border illegally, ending what he calls catch and release. And he has pledged to close gaps in the border wall, a core promise from his 2016 campaign if he returns to the White House.
I will immediately reinstate and expand the wildly successful Trump travel ban on entry from terror-plagued countries, territories, and places.
In an October speech, Trump pledged to restrict U.S. entry to people from the Gaza Strip, Libya, Somalia, Syria, Yemen, and, quote, anywhere else that threatens our security. Trump also said he would bar the entry of immigrants who support Hamas and send deportation officers to pro-Hamas protests.
If you support Hamas or any ideology that's having to do with that, or any of the other really sick thoughts that go through people's minds, very dangerous thoughts, you're disqualified.
Trump also plans to launch the largest deportation effort in U.S. history. According to a report from the New York Times, Trump aims to deport millions of illegal immigrants with large-scale roundups and by creating camps to hold them while they await removal. He's also vowed to take aggressive new steps with the help of the National Guard to deport immigrants with criminal records and suspected gang members. Trump said he would again move to suspend refugee admissions and vowed to end parole programs that have allowed migrants with U.S. sponsors to enter the country, including Ukrainians and Afghans. Trump also said he would seek to end automatic citizenship for children born in the U.S. to immigrants living in the country illegally, an idea he flirted with as president. That would go against the long-running interpretation of an amendment to the U.S. Constitution and likely trigger legal challenges. Trump also reportedly plans to try again to terminate the Deferred Action for Childhood Arrivals program, or DACA, which grants deportation relief to Dreamers who were brought to the U.S. illegally as children. The last time Trump tried to end DACA, he was rebuffed by the Supreme Court, which found that Trump did not comply with regulatory laws.
The U.S. House of Representatives has passed a stopgap measure to avert a partial federal government shutdown, with wide swaths of lawmakers from both parties approving the bill. But it still needs approval by the Senate and President Biden, and it sets up yet another budget battle in the new year. Here's more.
The U.S. House of Representatives appears to have avoided yet another government shutdown, passing a spending bill that is expected to be approved in the Senate and signed into law by President Joe Biden. But it only postpones the issue for another few months. This was the bill passing the House on Tuesday evening. The overwhelming bipartisan vote of 336 to 95 is a victory for the new House Speaker, Republican Mike Johnson, who faced opposition from some in his own party because the bill avoids some polarizing issues like deep spending cuts and border security. 93 of the 95 no votes were Republicans against it. Only 2 Democrats opposed. President Biden has to sign the bill by Friday to avoid shutdown. The bill extends current funding levels into the new year. Some programs like veterans benefits, transportation, housing, and the FDA are now funded through January 19th. Others, including defense, expire February 2nd.
U.S. consumer prices were unchanged in October, and the annual increase in underlying inflation was the smallest in 2 years, bolstering views that the Federal Reserve was probably done raising interest rates. Here's more.
U.S. consumer prices continued to cool in October, data released Tuesday showed, supporting views that the Federal Reserve was probably done raising interest rates. The Labor Department said the annual inflation rate dropped to 3.2% from 3.7% in September. Month to month, prices remained the same. Both readings were lower than what analysts polled by Reuters had expected. Most economists believe the Fed's monetary policy tightening campaign is over, a narrative that Chair Jerome Powell and other Fed officials have pushed back against as the central bank aims to bring the annual inflation rate down to its 2% target. Powell just last week said the Fed would hike rates again if appropriate. Though consumer prices have come down from a peak of 9.1% in June of 2022, the disinflationary trend has stalled somewhat against the backdrop of a strong economy powered by a persistently tight labor market. Still, the closely watched core consumer price index, which excludes volatile gas and food prices, also ticked lower from the prior month, and the annual increase for underlying inflation was the smallest in 2 years.
And retail spending dropped last month for the first time since March. According to the Commerce Department, sales fell 0.1% in October from the prior month. While big-ticket items like cars and furniture dropped off, Americans kept spending at restaurants and supermarkets. Economists say this is a potential sign of a slowing economy. Consumers are being squeezed by borrowing costs as interest rates reach a 22-year high. And there's some pre-holiday signs of a weakening labor market. Usually businesses this time of year start hiring extra workers to stock shelves and help with orders and deliveries. But this year, the job services firm Challenger and Gray Christmas says the number of seasonal positions publicly advertised this fall fell to the lowest level in a decade. And the Wall Street Journal also reports that the National Retail Federation's seasonal worker hires are down as much as 40% from 2021. The shift could be because economists are projecting a pullback on holiday shopping for the rest of the year after a summer of big spending, and that retailers have generally caught up on pandemic staffing shortages. Major U.S. airlines and the Transportation Security Administration say they expect record air travel over the Thanksgiving holiday period. Let's take a closer look.
U.S. airlines are predicting a record Thanksgiving holiday travel season. A group representing the industry has forecast 29.9 million people will fly over that period. That would be an all-time high and 9% up on last year. It would also be 1.7 million above the pre-health crisis record. Airlines for America represents United, Delta, and other big names. It says November 26 will be a record-setting day with 3.2 million travelers expected. The Transportation Safety Administration is expecting similar numbers over the holiday season. All the forecasts come despite cuts in services to New York airports due to air traffic control staffing issues. JetBlue, for one, has said it ended some flights as a result. Airlines generally have benefited from strong pent-up demand following the end of lockdowns. That has allowed them to set sky-high fares on some routes. Looking beyond Thanksgiving, some now see travel to Asia-Pacific destinations as the next boom market. Delta says it plans to increase capacities to the region by up to 50% over the December quarter.
And Thanksgiving is right around the corner, and if you're hosting a dinner this year, get ready for some sticker shock. This year's feast is going to cost you more, but with some thought and effort, you can save some money. Here's 5 tips to keep this year's feast under budget.
It's the Super Bowl of all the food holidays, Thanksgiving, and this year's feast is likely going to cost you more. Although turkey prices are down, side dishes are expected to be more expensive this year compared to last year. That's according to Wells Fargo's new Thanksgiving report.
That is the holiday. We clutter it up with so much other stuff, and we spend money until we're blue in the face.
So what can you do to save? Jessica Allen has these 5 tips to trim the costs. The first step is to create a budget and shop early.
Be realistic. What amount are you comfortable spending on a meal or your portion of the meal that you're contributing to the family dinner, and then stay within it.
2, trim the menu. Cut out the sides that are not huge hits at the dinner table. Choose wisely to avoid overspending on items that only get a few bites.
So can you go for meatless appetizers? Can you go for some beautiful, colorful vegetable or fruit side dishes that save you a little bit of money at the grocery store.
Number 3, go potluck. Experts recommend you ask guests to bring the desserts or sides. That way you can split the cost. Number 4, shop smart. Consider buying items in bulk and start looking for deals now.
When you start early enough, you've got time to piece together your meal from this place and this place and this place.
And finally, ditch the pre-made and pre-cut food. Consider buying those fruits and veggies and cutting them yourself. It's a bit more work, but it will help you avoid high price markups.
And now this next report looks into some of the latest options available to help combat retail theft.
This report looks into some of the latest options available to help combat and discourage retail theft. Mostly in the subject of shoplifting, retail theft is a challenging issue for many businesses. It racks up security costs for companies. Workers can sometimes be fired for attempting to stop criminals from exiting stores. Some recent innovations and ideas that have appeared to counter retail theft problems are social media monitoring. Some stores are monitoring social media as hard as it is to believe. Some brag about stealing or post pictures of stolen merchandise online. And another measure is virtual reality, VR, loss prevention training. Using VR to train employees on how to prevent and respond to shoplifting and theft, allowing them to practice scenarios in a simulated environment.
Pressing charge to the people who committed the crimes. That's what we need. That's what will be.
Francisco Marte, founder of the NYC Bodega and Small Business Group, is looking into options to help his and other businesses, but also says criminals are getting off too easily.
Some type of consequence, some community service, some type of consequence that they know that they are doing something wrong. That's the message that I need to send out the people. It will be consequence. If you commit a crime, you're gonna face a consequence for that.
Marte has had to bail his own worker out of jail for defending against a violent attacker.
And the people is getting more aggressive. So that's right. We are getting, even now we are using artificial intelligence, trying to prevent. We record that pictures so that when the people comes, we have the little alarms that let us know that the people who commit already a shoplifting before is here.
Though Marte did discuss with me how identification systems can cause discrimination issues. The theft problem has been so bad that Mayor Eric Adams of New York City plans to launch a new government task force to improve collaboration in response to retail theft trends. The task force will be made up of police, store owners, and others involved working together on theft and property crime issues and sharing information across different areas of the city. Some of the ideas and initiatives they have proposed so far are support for small businesses by providing funding for technology improvements, such as security cameras, and create asset forfeiture programs to targeted stores with reimbursement stipends for stolen goods. Implement an enhanced criminal sentencing structure, such as larceny charges upgraded if an incident involves violence, and hire neighborhood security guards for all the small businesses in one area. The issue of retail theft is troubling small businesses and large establishments, and the solutions are not one size fits all. Sean Marshall, NTD News.
Next, we take a look into a legendary name in the Chinese antique sales industry. NTD's Sean Marshall spoke with the owner about some of the famous names and history associated with this company.
At that time, Rockefeller visited every Saturday. Yeah, to find his toys, Chinese toys.
How good does your Chinese antique shop need to be to attract John D. Rockefeller III every weekend looking for Chinese toys that he referred to as pieces of antique? Well, basically, one of the oldest names in the business and one of the most prominent Chinese antique shops in New York City. Just one of the many famous and wealthy figures to shop at the legendary Tanyang Antique Company. Located in the nation's largest arts and antiques mall, the Manhattan Art and Antique Center. The shop owner, Chen Shizhen, continues the business name Tanyang that dates back over a century to China.
It is 120 years history. Not only from Tanyang, starting from Paris, also from my uncle who sold 100,000 silver dollars worth of antique to King Gustav when he was a young prince, 1910-20.
Outside of a museum, you'd be lucky to find as many cultural relics as can be found in this little shop. Chen has been quoted saying, "We had some star clients. Mr. Rockefeller was one who was not at all picky when it came to choosing for museum donation. Accidentally knock something over, and the price of it could be between the cost of a used car to the price of a luxury sedan or higher." And one of the most famous pieces to increase in value by millions was the mother of porcelain vase.
It was sold for $750 and in 1964, but about 5-8 years ago, it was re-emerging and sold for $20 million. From $750 to some $20 million. It's called the mother of porcelain vase.
This has only been a small part of the history of Tanying. Tanying was connected to Chinese revolutionaries associated with the nationalist movement and the early political development of the Republic of China, which later became the ruling party in Taiwan.
Yeah, so it started in Paris, then second location was in London, and third location was here.
At certain time simultaneously.
Yeah, simultaneously.
There's also Tanying's Japanese collection worth millions of dollars. Stories for another time, or you can go to Tanying in Manhattan and ask Chen himself for the stories. 上面是NTD News.